Well, let's welcome on board Rama Mohan Rao Amara, the MD and CEO at SBI Cards, joining in on the show right now. Mr. Mohan, good to have you on the show. Help us understand how is it that you're evaluating and assessing the asset quality? What are your expectations for the fiscal year going forward?
When we saw a kind of a strong revival emerging in terms of consumer confidence, we positioned ourselves in a very advantageous position to capitalize on this sentiment and improved consumer confidence. So when it comes to sourcing, we clocked 9.5 lakh new accounts in Q2, which is almost more than 56% as compared to the previous quarter. Banca channel, whose contribution was slightly muted in Q1, their contribution improved on expected lines. All the point of sale locations were also open. So both open market channel with a varied kind of a strategy what they adopt and banker contributed in a big way to this 9.5 lakh new accounts. When it comes to spends, we did well, not only on year-on-year basis, even on a quarter-on-quarter basis. Both retail and corporate spends put together, we clocked in 30% of growth. Retail, it's always a kind of a lot of strategies involved in terms of retail growth, where we are always ready with the right offers, right merchant partnerships, etc. So this worked in our favor. Retail growth has been one of the highest in the company's history. Corporate spends, again a good story. We continue to add new use cases in the B2B spending space. That added actually very handsomely to the growth in the corporate spends, though it is slightly, in terms of profitability, slightly lower as compared to the retail spends. Asset quality wise, it's a continuing good story with further decrease in RBI RE portfolio from 9%, which was highest in September 20. It came down further to 4% with a gradual runoff, both on account of repayments as well as charge-offs and settlements. So that asset quality improvement also helped us in lowering the provisioning requirement. So overall, the profitability metrics seem better. We feel like we have recorded a strong performance given the kind of macro environment that is prevailing in the economy.
Your cost of funds has gone up when I look at the numbers on a sequential basis. Do you expect this to stabilize, and at what rates do you expect this to settle in at going forward?
Yeah, you are correct. I mean, it looks like it increased from 5.2 to 5.5%, a 30 basis point increase. Most of it can be attributed to play of averages and different bases that were used. But when we look at it on a day-to-day basis, the funding cost remained the same, like in June quarter. Presuming that the current conducive rate environment prevails in future, we don't foresee a threat to any increase. We don't foresee any increase in the funding cost going forward, as long as the current environment prevails.
Why have your net NPAs and gross NPAs gone up sequentially and again on year-on-year basis? I mean, it should be the other way around, where the COVID effect should be coming down.
The bump in GNPA, where you rightly said like it was more than 7% last year, was majorly on account of RBI RE, which was at 2,700 crores at its peak in September 20, part of which became NPA over a period of time. That added to the NPA progressively. But as we started resolving them, both through payments and through settlements and charge-offs, its share in the overall NEA came down from 9% to 4% as on date. So the BAU portfolio is behaving normally, so that did not add to the problem. So that is the reason why the gross NPA is trending downwards. We have a ECL model, which helps us in terms of arriving at the base provision required in terms of stage 1, stage 2, stage 3 kind of categorization of assets. And we go by the ECL model, which also tells us like what will be the management overlay and what will be the overall provision coverage ratio. Because of some changes in the composition between stage 1, 2, and 3, the provision coverage ratio changed, while the provision rates for each of those categories remained same. So that is the reason why net NPA increased by 3 basis points sequentially. But we hope that actually both GNPA and the net NPA, the downward trend will continue as long as RBI RE comes down over a period of time.
So in terms of any geographical strategy change post-pandemic, are you looking at anything specific in terms of targeting, let's say, the non-salaried class, any particular specific focus which would be there in terms of growth?
For us, more than 50% contribution in the new accounts comes from our partnership with SBI. We work with their customer database under a program called Shikhar, where we pre-approve and pre-qualify the customers. And these customers are spread across different tiers based on the, the breadth of SBI, tier 1 to tier 5, kind of terms, the customer segment is there. So by virtue of that, by applying certain filters and models, we arrive at what is the base which can be targeted for selling the customers. So here we have an advantage of auto debit and auto sweep, through which we can access the customer's operating account, savings bank account, say SB account, for any potential recovery. So this brings in all kind of segments. Self-employed segment is also there, new to credit kind of segment is there, new to credit card segment is also there, while we also get some of the customers who are already carded by competition. Other channel which contributes is open market, and here also we use varied techniques. We use telecalling. We position our resources at partner stores. We have digital channels. We work with some of the digital. We have some digital partnerships with Paytm, Ola kind of players. So this brings in a kind of different segment of customers. Overall, it creates a kind of stable portfolio, both in terms of delinquency and contribution to the revenue. So we position ourselves. It's a constant evaluation of which segment will work for us. So we have certain metrics which we closely track in terms of early delinquency and what is their kind of collection effort needed to tackle that customer segment in collections. We calibrate our strategy in a very dynamic fashion.
Right. So is there a specific geography? Are you going to get more into micro lending, smaller ticket items, or for that matter, the BNPL model as well?
To your question on whether we are looking at a particular geography, it is more looking at the customer in terms of what is the propensity for delinquency and what will be their contribution in terms of revenue and in terms of fee income, etc. So based on that, different cutoff strategies are adopted for a different segment. So it is not directly aligned to any particular geography as such. It is more looking at the customer persona, customer profile. When it comes to the question of BNPL, credit card by very nature is like a BNPL, right, where you can buy now and pay later, enjoy a credit of 20 to 52 days free credit period, with an option of either availing the EMI loan either at the POS, point of sale itself, or post sale through a different kind of EMI products, what we have called FlexiPay and cash kind of loans. But having said that, BNPL is a kind of segment to look at. Definitely, a lot of action is happening. A lot of players are entering that space. It is mostly new to the credit kind of segment of customers, with youngsters predominantly dominating that. It's an interesting space. This segment, when it evolves, can potentially add to our top of the funnel, helping us in terms of customer acquisition. So we don't see it as a threat, rather we look at it as an opportunity.
Sure. So what's the competition from other fintech players looking like? You have YONO to help you, of course. Any other digital trends that you're catching up on?
As you rightly said, we have a partnership with the SBI. We do get customers through the YONO channel. We have special filters and special kind of cutoff strategy for getting those customers. Mostly it is a digital journey, which helps us in carding those customers in the quickest possible time, where we understand the profile because we get a lot of relationship kind of information regarding those customers. But we have already been working with several fintechs. As I said earlier, we work with Paytm and Ola by way of co-branded card partnerships, where we even look at new to the credit kind of customers, but understanding them based on the transaction profile and consuming that kind of information in carding those customers. Similarly, in the payment space, we are already part of Google Pay, where a credit card can be used, our credit card can be used for making payments. So we continuously look for opportunities to engage with fintechs, and whenever there is an opportunity mutually beneficial, we definitely look at them.
A final question to you before we let you go. In recent times, there's just been so many developments around the credit card businesses, whether it is Citi putting it up for sale, HDFC once again being allowed by the RBI to issue new cards. So clearly, competition is intensifying. How are you planning to tackle all of that?
We always maintain that we have our own strategy, internal strategy, more aligned to our risk appetite, based on the customer segments where we are comfortable, not necessarily based on the competition or presence or absence of competition. And we always aspire for using the best utilization of the capacity. So we said we definitely aspire to card 10,000 new accounts a day, which we were able to maintain throughout the September quarter. And if you look at even September month new account sourcing, we were able to maintain despite the largest player coming back. So our strategies are more in terms of how to work with the existing customer, how to make them active, how to make relevant offers which are relevant to them, and timely, how do we convey those offers. This is a journey. I mean, our strategy need not be necessarily aligned to competition strategy. We always aim for a sustainable growth, which we are able to see for the last couple of quarters. Consistent performance has been there.
What's his name? Right. Let's leave it at that. Thank you so much, sir, for joining us today live on the market. That's SBI Cards for you. So much.